Hi, I'm Ross White, Chief Economist of the National Treasury Management Agency. We're about to release the latest edition of our investor presentation. In this edition, we're going to look at the NTMA's funding in the first 6 months of the year, catch up on the government finances, which were recently released for the first 6 months, and then finally to look at the new metric which our Central Statistics Office released last week. This is a new metric for the living standards of the Irish economy, given the trouble with the multinational sector that we always have in the data. So the NTMA has already issued 9.5 billion of government bonds this year, out of our total range of 9 to 13 billion. Our next auction is due in September. Of course, for the NTMA, the job is a lot easier given the good health of the public finances here in Ireland. In the first 6 months of the year, Ireland was on target yet again. But the year started slowly. It was only in May and June that tax revenue caught up significantly, having lagged in the early months of the year. Government spending was disciplined in the first 6 months, and it was notable that health spending was actually behind target. That's the first time that we've seen that since we left the programme at the end of 2013. In fact, if the second half of the year is repeated, we'll, for a 7th straight year, meet the target presented for the government finances. Ireland has worn the crown of fastest growing economy in Europe for the last number of years, but the new metric that we now have for the economy, GNI star in the jargon, or a modified measure of our national income, might give us a better way of substantiating that strong growth for Ireland. In fact, for 2016, the new metric grew by about 9%. And we know that inflation across the economy was very low, around zero. So in fact, the volume of activity in Ireland grew about 9% last year. What we often do is try to check the government figures with what's going on in the labour market. We know that labour input in the economy increased by about 4.5% last year, so that's employment plus the hours worked. And if you add a little bit in for productivity, you get close to that figure of around about 9% for the economy. Many investors now ask us if we'll use GNI star to judge debt sustainability for Ireland. We answer the question in this respect, that what we need to look at is the growth rate of the economy versus the interest rate. So whatever metric you prefer to use, whether it's the 26% growth in GDP back in 2015, or a new metric of 9% for last year, or even the labour market of about 4.5%, the growth rate is faster than the interest rate. So all of your debt ratios are declining. As we look at it now, GNI star will be used as a complementary ratio alongside debt to GDP and debt to government revenue. We hope you find this presentation useful.